My name is Jairo Murcia, again for the new video to learn more about real estate. Today's real estate vocabulary. The reason I do this today is because at the previous videos, the people told me about it, make comments. They don't understand sometimes exactly what are you talking about in different subjects. For example, one of the words we use a lot is loan. Loan. We all the time say the loan for the house. We apply for the loan. We receive the loan. They give you a proof for the loan. This is the amount of dollars, like the loan for 100,000 or the loan for 125,000. Any amount, that's the loan, and the bank is the one provide the money. The bank provide the loan. That's the word loan, the money from the bank. The next one we're talking about today is, for example, cash out. Cash out. Cash out is when you have a house and you have this house, for example, for 10 years. The price for that house is $100,000 when you buy it. In 10 years, the value maybe is $150,000. But you paid the mortgage for 10 years. You have the balance right now about $70,000. So you have like the house is 150 today, you have the balance for the loan $70,000, so you have the difference $80,000. If you want to do the cash out, the bank give you a loan for part of this money. For example, they can give you like 75% for the total amount from the house. So if the house is $150,000, the 75%, $150,000 times 75% is $112,000, $112,500. That's the amount maximum the bank give you a loan. To do the cash out, you have a balance 70,000 from the loan minus 112,500 minus 70,000 you have in the loan. The bank can give it to you 42,500. 42,500. This is an example for cash out. You want to take it out money from your house, you go to the bank, they give you appraisal, and they give you the value for $150,000, and you have a balance for $70,000. You have the difference, $80,000, and the bank give you maximum 75%. The maximum 75% from $150,000 is $112,500. They give you the maximum loan for $42,500. For example, that's a good deal for somebody have a house, live for 10 years, they don't have any advance for her house, they can do a cash out to pay the loan for the car, to pay the credit cards, and release the bad credit. The other option is, if you don't have any car payments, if you don't have a credit cards, you can take this $42,000 and give it the down payment for another house you can rent and make money later. Okay, this is the other very important word we use, cash out. Okay, let me clean this one again. The next word we can use a lot in real estate is cash flow. Cash flow. This one we use a lot for explain when you're going to buy a house, for example, for $100,000, and you have the down payment for the 20%. Say you have $20,000 down, and you have the mortgage or the loan for $80,000. You have to pay for the loan about X amount, and taxes and insurance, and you rent the property for $1,200, and your payments for all the mortgage and different things is $900. Your payment for the loan, for the taxes and insurance is $900. You put the difference between the rent and the expenses, the difference $300. This amount is cash flow. That's calling cash flow. It's the difference of the money you have in your pocket every month when you rent a property. Okay, that's another very important word we use in real estate. That's why I try to explain and say again and again, please watch the videos a couple times for you can stay familiar with the word. Investors. Investors is the person, they have a lot of money, or they have money to use in real estate or in different words. The investors, they can use the money to give you a loan for different people to buy houses or buy a new business or different things. But in real estate, investors is the persons, they have money to use it for the other people to buy the houses. Get it? Investors. When we're talking about investors, this is the person, they have money to lend to the people so they can buy the new house. Okay, we go to the next word. The next one we use a lot is down payment. Down payment. Down payment. The down payment, when we're talking about the money you have to buy a house. Because when you have a house to buy, the bank told you you can buy this house. The house costs $100,000, and the bank, they say you have to have the down payment, the 5%, 10%, 20%. That's the money you have to have in your pocket to buy the house. If the bank, they say you need a 5% down, you have to have $5,000 in this case. If the bank told you, do you need to buy this house 20% down, you have to have $20,000 for you can buy the house. Down payment. Clear? Simple. Remember, we teach real estate simple because we want the people, they understand easy, and day by day they can go in the business and start as soon as possible to make money. The other word we can teach today is the title company. Okay, the title company is the office. Normally it's a building or a little house at the place you go and sign all the paperwork. Sign all the paperwork to buy the house. Title company. That place, the buyer go and sign all the papers so they can have the house. The seller go over there and sign all the papers so they can sell the house and receive the money. And the title company, they do all the distribution about the money. This title company take the money from the seller, from the buyer, take the money and give the money to the seller, give the money to all the paperwork they needed, insurance, taxes, all the expenses. The title company is the place to do all the paperwork. The sellers, the salesperson sign the papers to sell the house. The buyer sign the papers to receive the house and the key. The title company is the one they give the check for the seller, the check for the taxes, the check for all the expenses they have to do in that transaction, and make sure everything is right about the lawyers and all the paperwork. The next word we have to learn is Wall Street. Wall Street. The people talking about the Wall Street, because the Wall Street is the Wall Street. Wall Street. That's, for you can remember, is a nice building in New York, and that's the one for years and years is the place they move the money. They use the stocks, they call in the stock markets the Wall Street. That's the one they all the transaction, the business in New York, they call in Wall Street. It's very important to learn that one, because Wall Street is the place, for example, they build it out the pool to collect the money to start do the loans for everybody in the United States. The next word we can learn is insurance. That one is very simple, because all the time when you insurance, Insurance. The insurance is all the time when you go to buy one house, because the bank give you a loan, they want you have the insurance, because if something happened to your house, they want to protect the money they invest in this house. So that's why almost every house, when you buy the house, you have to count how much you pay for the loan, how much you pay for the insurance, how much you pay for the expenses and other expenses, and how much you pay for taxes. That's another word we use all the time. The other word we use, the last one for today, is property taxes. The property taxes is, again, all the time when you buy a house or you have a house, you have to pay taxes to the city. So all the time you have to give you money every year. Normally in United States, the last day you pay your taxes for the houses is in January 31st. Every January 31st is the last day to pay the taxes. If you don't pay the taxes for the properties, you are in trouble, because you can lose your investment, you can lose your retire, you can lose a lot of stuff. This is everything for today about vocabulary about real estate. If you have any question, please don't forget, give me the comments on jairos.e.murcia@gmail.com. Thank you for watching, and see you next time.